your busy day to learn a little bit more about Michigan auto reform. So we have a team here. We're located right next to Rochester High School. You'll see we have multiple carriers now for auto and homeowners insurance as well as commercial insurance. But we've done, I guess this is our 6th or 7th presentation across the community on auto reform. We've done the Chamber of Commerce, the Rochester Rotary Club, Most Sherry Retirement Center, Troy, just different other Rotary clubs, that type of thing. So we've done quite a few. Prior to this meeting, I literally just got off with the Department of Insurance. They have their follow-up meeting just to kind of talk a little bit about what is happening, what they're seeing, and as this transition moves forward. So it's certainly going to be an interesting next 6 months or 12 months, really, as we develop the results of automobile reform. And it's certainly more than personal injuries. So, but we have a large staff. Everybody here is licensed. Everybody has the opportunity to provide assistance to answer your questions. So feel free at any time to follow up. So let's talk about OPC. So first off, I would imagine most of you supported the OPC referendum on the ballot just recently. I thank you for that. What OPC does in our community for not just the health and well-being of the senior market, is remarkable. I think we're extremely blessed, and yeah, it takes a little bit of funding to do that. But those of you that were listening to Marianne just a few minutes ago, just talk about what they're doing with the tents and those kind of things are significant. So I thank Marianne for putting this together as well and being able to put that together. So thanks for the support for OPC. So why the change? Why did our legislators decide to make a change to the auto reform? And I think it's important to understand this, right? We have had, without question, the highest priced automobile insurance in the country, not even close to anybody in comparison, especially when you look at our neighboring states. Michigan's rates are 3 or 4 times higher than Ohio, Indiana, and Illinois. So certainly, and the difference between the other states and Michigan is getting greater, not smaller. So obviously, there was a need for change. Auto insurance is extremely unaffordable in the city of Detroit. The average auto insurance for a car is $6,000 in the city of Detroit. And there's a lot of reasons for it, but it's certainly not sustainable. The benefits of no fault have gotten broader and broader as far as what is being paid, and we'll talk a little bit about that as things go on, but it just keeps getting expanded, and it's just not sustainable. There's no control cost for the program. You could have an auto-related accident, requires you to go to the hospital and requires you to be able to get an MRI. And that MRI charge to the insurance carrier could be 4 or 5 times what Blue Cross Blue Shield or Medicare. So there's just no control on the cost side of the things. Too many people are receiving benefits. You may not know this, but if you were to drive from Ohio to go to on vacation in Michigan and you were injured, you get to choose, do you want Michigan benefits or Ohio's benefits? Now think how many, those people don't ever pay $1 to the Michigan plan. And of course, they all pick Michigan benefits because there's nobody anywhere close to the United States with the benefits that we have in this state. So too many people were getting benefit that weren't paying into the system. We'll talk a little bit more about that as well, but they're fixing some of those things. So that's a good thing. And because of the unlimited payout in automobile insurance in the state of Michigan, many carriers that sell personal auto insurance elect not to play here which minimizes competitiveness, and that hurts our pricing. So if you look in Michigan and you look in Ohio, the number of insurers that do business in Ohio is significantly greater than Michigan. So I think we're starting to see some new companies start to come back because of the law change. They feel that they can, insurance companies price automobile insurance with actuary data. And when you have unlimited numbers, there's no way to actuarially put that in play. So you're starting to see some changes with that as well. So let's talk about one of the first coverage parts that's affected by the rate or the new law. Personal injury protection. This is probably 45 or 50% of your premium in the state of Michigan. And here are some of the things that are covered by the current law. Obviously, unlimited lifetime medical benefits. Okay. Now keep in mind, as we talk about personal injury, how many states do you think even have this coverage part as part of their insurance, their automobile insurance? There's about 4, and the closest one's cap is $50,000. Ours is unlimited. Okay, so obviously you can see there's a significant difference between Michigan and other states for automobile insurance. Obviously, you got a small survivor benefit. You have lost wages up to 3 years, capped at $68,616 per year. So that's the benefit that you get under personal injury protection for lost wages. You'll see some changes that are going to hold us responsible for other parties of this coverage as it comes forward. Extensive in-home attendant care. Think about this. If you get injured in an automobile-related accident, it has to be auto-driven, you have home health care benefit 24 hours, 7 days a week, 365 days a year. Absolutely unbelievable amount of benefit that comes into play on the personal injury side. Not only do you have the 24/7, but a family member or friend can stay home and take care of you, and they can get compensated prior to the law change for 24 hours a day, 7 days a week, well over $200,000 a year. When you have somebody being able to make $200,000 a year to stay home and take care of an injured family member, it creates more just significant fraud because most of us don't make $200,000 a year. So one of the things you'll see that's changed is they've capped the amount of hours that a family member or a friend can get paid to stay home and take care of an injured family member or friend to just 56 hours a week instead of unlimited. PIP also pays for your transportation to and from all your medical benefits, to get a massage, to see your doctors, to go to the hospital for checkups. All the transportation is also included in the PIP benefit. If you had to have your home or your automobile modified so that you have accessibility if you're in a wheelchair, it pays for the repairs to do so. It pays for your long-term cognitive and speech therapy, as well as custodial care while you're in a residential rehab center. So what do you think? Is that pretty broad coverage? Do you have that broad of coverage with your Medicare? Do you have it with Blue Cross Blue Shield? Do you even have the same coverage with your long-term care insurance? The answer is certainly no. So it's extremely broad coverage, which causes for the significant increase. We talked a little bit just briefly about the PIP and people losing benefits. This is probably one of the most important things that we'll talk about today. If you know of anybody that has a person that's driving a vehicle that's registered in your name or your adult children's names, and they're not living in your adult children's households, these people have a significant change that's happening to the law. So if you're not a resident relative living in the same house, your PIP benefits go away automatically because you're not a resident relative of the household. This is significant different. You'd be surprised at how many people we insure that provide vehicles and insurance for people that, the family members that don't live in the household, that may be living in Detroit, or they could even be living in another state. And they're still covered on their parents' automobile policy. So with the new revised law, that benefit under PIP completely goes away. Now, they can possibly, if they get injured, they could try to file a claim under the Michigan Assigned Claims Plan, but it's certainly not the same type of thing of trying to go through your regular insurance company. And even if they're able to get that benefit, it's capped at $250,000. So this is very important that people understand what happens. If somebody visit you, one of your children visit you and they're driving your car and they're not a resident relative, say they live out of state and they get injured, they can no longer get our PIP benefits, right? They have to get their benefits from their out of state or out of city coverage. If they have PIP because they live in Michigan, their PIP benefit will cover them if they get injured in your car. Big change, I can't stress it enough. If you know that your kids are allowing their adult kids or adults to drive their vehicles and they're insured under their name, they're registered and insured in their name. Now, unless they're going to college. If they're going to college, this part of the law doesn't come into play. But it is one of the most significant issues. It's not being talked about enough, and the coverage just goes away. So please, if you know of anybody where that is a situation, make sure they contact their insurance agent and fix this issue, because it's a big problem. Non-married couples living in the same household, when only one of them is named insured. So this is a non-relative, non-married person living in the same household. And what you need to do there to fix this problem is just make both parties the named insured on the insurance policy. So that way that both parties get PIP coverage. How can these people get PIP benefits? And that's again, submitting a claim if something happens to the MAIPF fund, which is the Michigan Assigned Claims Plan. But that's very important and just not being communicated near enough. You don't want to register, go buy a new vehicle and put it in your name and give it to a kid that's not living in your household, because they're not going to have PIP benefits. You don't want to lease a car that you're going to allow somebody that's not living in your household drive, because they're not going to have PIP benefits on your insurance policy. So please be aware of that as we go forward. Qualified health care. This is going to be a term that you need to understand. And like I said, I just got off the phone with the Department of Insurance, and this is one of the biggest challenges that we're having in the first 6 or 8 weeks of this PIP reform. So in order to be able to drop PIP completely, now, and you're going to see different options, but I'm talking about dropping PIP completely from your automobile insurance. In order to do that, you must have Medicare. Let me see, it seemed like it. So you must have Medicare Parts A and B and something that they call qualified health insurance. So if you have one spouse that's on Medicare and the other spouse not aged in yet to Medicare, they are required to have qualified health care before you're allowed to drop your personal injury protection. Qualified health care means that your healthcare provider agrees to participate on a first dollar basis if you get injured in an auto-related accident, and it has a deductible, an individual deductible, calendar year deductible of no more than $6,000. Okay, so that's really important. So the new PIP benefits, the changes, you still have the unlimited PIP benefit that you had before, just as you did in the past. And you'll see a little bit of auto savings price or cost savings, even if you maintain that. And we'll talk about that because one of the things that happened is the MCCA cost goes down. So the second option that you have is you could reduce your benefit from unlimited to $500,000 of benefit. If you still have qualified health care, that qualified health care can help pay in addition to, but that $500,000 limit becomes your maximum that is paid if you or a family member gets injured in an automobile-related accident. So remember, so unlimited 500,000 and 250,000 is another option that you can choose. That becomes your 12-month policy year limit for those benefits that we just talked about on PIP insurance, right? On the PIP coverage. If you're on Medicare, you can buy, or Medicaid, I apologize, Medicaid, you can buy a benefit of just $50,000. And the reason they lowered it to that limit, people on Medicaid are struggling on the financial side of the house, and this might give them the opportunity to be able to afford to buy into auto insurance. The other, I don't think I mentioned this in the front page, but the other major problem we have in Michigan is not only do we have the highest cost, we also have the highest number of uninsured drivers in the country by a long shot. So it's estimated that we're beyond 35% of the vehicles driving on Michigan roads that are driving without insurance. So obviously this Medicaid piece is part of that, to try to get those people that are struggling on the financial side to be able to provide some kind of level base coverage for automobile insurance. So they're trying to help that percentage. It is amazing when you think about at least 1 out of 3 drivers in the state of Michigan are driving without insurance. So when they hit you and they don't have enough liability insurance, it creates problems, obviously. So that's a huge problem. The sixth option is allows you to opt out totally of personal injury protection. These are the people that are seeing the biggest savings. The savings we're seeing are probably $250 or $250 to $500 per vehicle per 6 months. So if you have 2 vehicles and you opt out of personal injury, you may save anywhere from $800 to $1,100 a year on your automobile insurance. But you must qualify with Medicare, Parts A and B, and if you have a spouse or another family member that does not age in or not eligible yet for Medicare, everybody that's in that household must have qualified health care. That verification must be supplied to your carrier or your insurance agent, or you will not be able to make that change. Whether it's a copy of your Medicare card or Medicare cards if both spouses are covered under Medicare, but you have to have a letter. If it's not Medicare, it's qualified health insurance. You must have a letter from your health insurance or your employer that says you have qualified health care And that qualified health care provides coverage for any member in the household that's not covered by Medicare, and that the deductible, the individual calendar year deductible, is not greater than $6,000. Without that verification, we cannot change your insurance. And if you send in the request, you're getting requests. Those of you that have already renewed, you've already seen your letters from your insurance company. If you requested to reduce or eliminate PIP and you don't have that documentation, they will not be able to change your coverage. So that verification is very, very important. And when they wrote this law, they did it with your interest. They don't want somebody to reduce their medical benefits and get injured in an automobile-related accident that does not have health insurance, because the fiscal strains on your family in that scenario would just be too great, okay? So those are the 6 options that you have going forward to change your personal injury protection benefit, okay? So what are the law requirements, the legislative requirements for your premium savings when you change to these coverage parts? So obviously, just moving to unlimited under the new law, you're supposed to see a reduction of your PIP benefit, just that PIP premium, of 10%. If you drop to 500,000, your PIP premium drops by 20%. 250,000, it's 35%. If you drop to 50,000, a maximum limit of PIP, your PIP premium is supposed to drop by 45%. But guess what? I said yours. It has nothing to do with your prior PIP premium. The law says that the insurance carrier, they have an average PIP premium. And when they look at, does the insurance company qualify for the law requirement of savings, they don't look at it on an individual client basis. They look at it as an average number for the insurance company that was in effect June 11th, 2019. That's the requirement of the law. So if the insurance carrier saves the average PIP premium, those numbers that were in effect June 11, 2019, they are compliant. The other thing that goes into this law is that savings is required for the next 8 years. Think about that, 8 years. But guess what that also requires you to do? Every year, you have to verify your health insurance. So if you opt out of PIP, you're required to prove your health insurance, whether it be just another coverage for the Medicare verification or another letter from your healthcare provider that you have qualified health insurance. So remember, if you change, if you eliminate PIP, every annual renewal, you're going to have to verify that you're still you still have Medicare Parts A and B and or qualified health insurance. So just know that that's a requirement. The other thing is, if you have qualified health care and you lose your benefit because you're laid off from your employer, or could be a variety of things, but if you lose that qualified health care and you do not notify your insurance company within 30 days, you do not have PIP coverage going forward. So please, whatever, this is new. We've never had to do this before, but if somebody that's reducing or eliminating their PIP benefit and they lose their qualified health care, please remember that you're going to have to be able to verify that with your insurance company. Otherwise, you lose this PIP benefit. So please just make sure you understand that. The MCCA, the Michigan Catastrophic Claims Association, what is it? This is, when you see this stuff on the news, this is where everybody says there's this huge bank of money where all this slush fund money is sitting to pay for the injured parties that had already had losses, significant losses, to pay those injured parties their benefits, the Michigan Catastrophic Claims Association. What happens is, if you get injured and your claim for PIP exceeds $580,000, that's the number today. It does go up annually, but today it's $580,000. So if you have a claim that exceeds $580,000, the MCCA actually pays your benefit from that point going forward. It's not your insurance company. And in order to fund that, we have been paying $220 a year per car to fund for those catastrophic losses. Now, remember, the percentage of drivers that get injured to that point that we require payment from the MCCA, I've seen as high as 3% and as low as 1% of the drivers in the state of Michigan that have a claim of that significance that would actually get the benefit of the MCCA. So, but with this law change, what they did is they reduced that $220 per car per year to $100. So that's $120 savings per car per year. Now, when you go back to see the percentages of savings from the reduced limits, this savings is allowed to be calculated in that 20, 35, or 45% savings. So it's just the way the law was set up. So that's that, the options and the cost savings if you pick those various savings. Some different additional changes that come into play. They remove some things that the insurance companies have used in the past to actuarially price automobile insurance. And this part drives me nuts. I don't think it's fair, but it doesn't have to be fair when the legislative gets involved. But they remove discounts for multi-policy, home ownership, credit rating, marital status, educational or degree levels, and most groups. You know, they're trying to force more equitable or fair pricing between Detroit and Pontiac and the larger metropolitan areas. And, you know, a lot of those folks in those areas may not have been able to get this reduction in price. Now, keep in mind, they were actuarially verified in the past, but they now have pulled those discounts away. They may still show on your policy because other states that carrier operates in, it may still show that you have it, but they've taken away the pricing difference for that. The other part that comes into play, not until July 2021, is the new fee-based that it's similar to what they do for Medicare, workers' compensation, the Blue Crosses of the world. If you get injured, they're only going to pay so much for an MRI or for medical services. Those fee bases, that starts July 2021, and that moves forward for the next 3 years before it fully gets implemented. They didn't want to have too much of a cost issue to the medical providers to just throw out the new pricing or the new limitations. So That's going to get phased in. But as that gets phased in, you're going to see better pricing on the options that have unlimited $500,000 and $250,000 of PIP, because there's going to be less paid to the medical providers for those auto-related accidents. But it's going to take some time to get the actuarial data to be able to verify and justify that new pricing. So I think you'll see some better pricing in the future for that $500,000 and $250,000 benefit. Today, in my opinion, there's just not much benefit there on the cost savings for what you give up. But it'll get better over time. The other thing they put in play, if you didn't have insurance previously, you basically had to start into a non-standard product to get automobile insurance. For the next 18 months, those people that didn't have insurance prior, they can get insurance just like they had insurance in the past at the same rates that you and I get. And that's going to happen until January of 2022. And again, the reason for that is they want to shorten that 38 or 30% of people driving without insurance. So they're trying to give those people an opportunity to get better pricing, so perhaps they'll participate in automobile insurance in Michigan. Mini tort, this is the piece that pays the other company if you hit me, and it pays my collision deductible of $3,000. It's been raised to $3,000, just so that you know that. So it's called mini tort. It's just provides protection for you if you do damage to another person's vehicle. It pays now up to $3,000. Motorcyclists, this is kind of a change. Motorcyclists don't buy personal injury. It's not a part of the motorcycle policy. But if I'm driving a motorcycle and I get injured from an auto that has PIP benefits, I'm the injured driver, I'm the motorcyclist, I can get the benefit from PIP coming from the at fault of the other vehicle's policy, whatever limit of PIP they bought. But in the past, since everybody that drove a car had unlimited benefit, and now they can go to 500, 250 or drop PIP, you're going to have people that get injured in motorcycles that aren't going to be able to get the PIP benefit from the party that caused them medical harm. So and it's not just motorcyclists. It actually happens with pedestrians, bicyclists. Those people in the past were able to get PIP benefits whether they had insurance or not. That's not going to be the case anymore. So just a heads up on that piece. Okay, so other changes that are affecting us for your auto policy. We talked about PIP until there's really, I mean, we hit that pretty hard. But the other piece that changes, and this is really important to understand, is the exposure that you have as a driver in Michigan, because you're now going to be liable to the other party that you caused medical harm to, because they may have reduced their PIP benefits or dropped their PIP altogether. Now, if you do harm to them, you could be liable for their whole medical exposure, just like every other state in the country. You know, so if you're in Ohio and you hit me, you're responsible for everything from my coverage if you are at least 51%. So that we've gone back to tort liability for automobile insurance for the medical benefits, medical injury, which is, you know, we had it back in 1973. Now we have it again. So your bodily injury limit that you carry is now much more important than what it may have been in the past. So please make sure you have good discussion with people. You know, everybody has different assets and different things that are at risk fiscally. but you got to make sure that you're covered so the injured party that you did harm to doesn't have an opportunity to get to your assets. So the bodily injury is really important now. Limited compensation for family members, I talked about that briefly. Instead of 24/7, they can only get 56 hours a week if they stay home and take care of their injured family member. Information you'll need for your insurance carrier agent. You're getting about 40 days prior to your renewal. After July 2nd, you're getting communication from the insurance company that you have to make a decision on your coverages for your insurance after that renewal. If you remain unlimited, then you don't have to respond to it. But if you want any other change other than unlimited, you're required to complete the documentation. And if you opt out, you're required to include your verification of health care, okay, the Medicare that we talked about. Another coverage that I think is going to be much more important going forward is something called uninsured and underinsured motorist coverage. It's not a part of the requirement under the law, but this is your coverage. If I hit you and it's my fault, and I do bodily harm to you, and perhaps you lowered your PIP benefit, so your medical coverage isn't what it was before, your uninsured and underinsured motorist coverage could come into play to assist you. So we always recommend that your uninsured and underinsured motorist coverage equals your bodily injury limit. And for those that need a personal umbrella policy to give them that added liability protection over their underlying automobile insurance, now, after July 2nd, we're suggesting that you add this additional coverage to your umbrella because it will provide your family that additional coverage if the person that injured you doesn't have insurance. Remember, that's 38% of the drivers today. Doesn't have enough bodily injury to pay for your injuries, or doesn't have coverage at all. So uninsured, underinsured motorists should have a discussion with your insurance agent. And I already mentioned, if you opt out and your health insurance changes, somehow, I don't know how you're going to remember, because you've never had to call your insurance agent in that case before, but the new law only gives you 30 days to call your insurance agent and let them know that you lost your qualified health care so that they change your personal injury protection. So kind of going forward there. I kind of talked about a lot of stuff on this slide already, about the rating limitations, about the out-of-state drivers, about that 30-day limitation. And again, here again, this savings and this verification of healthcare, it goes forward for 8 years from July 2nd of 2020. So what are we recommending for most people? You know, obviously the benefits of unlimited PIP are significant. With that said, there's only 4 states in the country that even have PIP coverage at all. And the next state that has the closest coverage to us is limited at $50,000. So yeah, PIP is important if you get severely injured, but the percentage of drivers that get injured to the level that's required to get the benefit that unlimited PIP is extremely small. So I would not let anybody tell you that dropping unlimited PIP may not be the right decision for you. Because if you could save $1,000 a year on your auto insurance for 2 cars a year, that additional $1,000 is in your pocket, not your insurance company's. you're still going to have your Medicare benefit that's going to pay the majority of your Medicare or your medical expenses. But there are coverages that you may lose when you do that. But again, it's a small percentage of the drivers that get injured that are going to see those benefits. So, but again, I can't say enough. If you do get injured to that severity, you're rolling the dice a little bit. Still may be the right decision. It's just you're rolling the dice. I already talked about increasing your bodily injury and uninsured motorist coverage to whatever limit you can afford, because you will be sued if you cause injury, bodily injury, to somebody that doesn't have insurance or has reduced their PIP benefits. It's not that expensive to increase that today. I believe that's going to get more pricey as things go, because you're going to have a higher percentage of drivers with reduced benefits that are seeking compensation from you as another party. I can't stress enough, I think the best value for your insurance dollar is and has been and will be having a personal umbrella policy. For a family without youthful operators and 2 cars, $1 million umbrella is probably only $150 to $160 a year. And it provides that extra $1 million of coverage over top, not just your auto, but your homeowners and anything a family member would do that's accidental and does harm to another party. So I think it's the best value for your insurance dollar. If you can afford $150, $160, I think an umbrella is certainly recommended. Umbrellas get pricier when you have youthful operators, and if you want to add the uninsured, underinsured motorist coverage on your umbrella, you do pay for that a little bit. But it's, again, in insurance, when you pay a little bit more actuarially, you know the numbers are there to verify the need for the benefit. As you begin to get closer to your renewals, I would contact your insurance agency 45 to 60 days prior to the renewal. I would already get the verification. Obviously, you already have your Medicare cards if you're on Medicare, but if you need verification of qualified health care and you think you may even entertain a change in your PIP, go ahead and get that verification from your healthcare provider or your employer, because you're going to need it anyhow, and it just gets you prepared for the next step. So that's the piece. I talked about earlier, if you have anybody driving your car on a regular basis that has the possession of your vehicle and they do not reside in your household and they are not at college, you must contact your insurance agent and get this handled ASAP, because that driver loses their PIP benefit. We've talked about it already, but I can't tell you, I think there's going to be major issues and major claims in this part of the scenario of the law change. No longer title vehicles in your name that you give to children, or not just children, but adult family members. It's just amazing. We're having a little bit of a economy challenge now after COVID. So the number of parents that are allowing adult children to have their car and to drive their cars, it's amazing to me. I can't imagine it, but it is happening a lot. So again, I don't want to beat a horse, but just be aware of that. I already talked about the MCCA dropping from $220 to $100 a car. So what if your annual PIP premium is $700 a year? Now, for those that have 6-month policies, that's $350 every 6 months. I would guess most people's PIP coverage is at least that expensive. So if you change to unlimited benefit, you'll save about $70 a year, and you stay with the unlimited benefit. If you elect $500,000, you could do the math at 25 or 35% is what you're going to save there. Okay, most of us, because this is OPC and this is rewired, not retired, this piece is important because this is trying to show you what personal injury benefit on your auto-related pays that your Medicare does not. So you can look for, this is just bringing those things out with Medicare and Medicare supplement. You know, those things on the left are covered by your auto insurance. The things on the right are either limited or not covered under Medicare. Again, it's important that you understand these things when you make decisions to drop or reduce PIP, because you're giving up these benefits that are just not going to be covered, whether it's Medicare or your qualified health care. So these things are important as you look through those things and see if it makes sense. Again, remember, when I say give it up, it's only for an auto-related accident where your injuries would cause this need. We're not talking about people that have dementia are going to need long-term care benefit. It's not covered by auto insurance anyhow. But just these two slides are important to understand because you're giving up benefit if you reduce or you eliminate PIP from your auto insurance. Just a quick thing about us, we have formed a relationship. We are now doing investment and related products through a company called McClellan Financial, through through both Jim and Blake McClellan. So if we've had your 401k mutual funds, we're now doing that in conjunction with Jim and Blake McClellan. And they're actually now selling our insurance products on the property and casualty side as well. So we have a referral program to support our local businesses. Anybody that gives us a referral, we give them a DDA gift certificate. We want it to be spent in the local businesses to support the local businesses. But the person that gives and the person that receives get the DDA gift certificate, whether we write your insurance or not. We thank everybody for participating. If you have questions, our phone number is 248-402-5005. You have my email. Marianne, is there questions or anything that we can handle at this time? I don't hear anything.
Would you please repeat your phone number and email?
248-402-5005. And it's Tim Crawford at CrawfordInsuranceGroup.com.
And Tim, I can email your contact information to everyone that's registered today.
Good, good. I appreciate that. We will provide anybody that has an email, Marianne, we'll give them that Medicare splat, those 2 pages that show the differences of Medicare and PIP. Okay. So I'll email that to you, Marianne, if you want to share that with everybody. That way they have that as they start to look at what their options are going to be.
Okay, that's wonderful. Now, you did get some additional questions. Can you see the chat, Tim?
I do not. Let me.
Okay. So you can, if your presentation is done, we'll just stop that. And then down at the bottom of your screen, right next to where it says share screen, there's an icon that says chat.
Okay.
And
okay, let's see. Tell us the pros and cons of opting out of PIP. I think I did. You know, opting out of PIP is somewhere for 2 vehicles about anywhere from $800 and $1,000 savings. So it's a fiscal benefit. and you give up the benefits that we talked about. Also, if you have qualified personal insurance. I'm not sure what that is.
Martin, do you want to explain what you meant by that?
I cannot hear him.
Okay, I can't either. Just move on to the next one.
What? Can you hear me?
Oh, there's Martin.
A little bit.
A
Can you
little
turn it
bit,
up?
Martin, not too much.
Yeah. Oh, I'm sorry. Hey, Tim, if you could include people with personal insurance that is qualified, I'd like to have that chart that you did for Medicare
Oh, yeah.
for personal insurance, and also because
It's-
we're not on Medicare.
Martin, that doesn't exist. There's way too many plans for us to be able to put that together. Your employers have all, you know, there's so many different ways that they can bundle your health care. We just don't have access to that information.
Well, let me ask you this then. I don't want to belabor it, but what do you tell your clients that have personal insurance that is qualified? How do you help them work through it if you don't know their specific plan and all that other variations?
So I think the most part, and again, I'm being broad in answering this, okay? It's intentionally, right? So first off, when you have personal insurance or employer-based insurance, one of the differences is going to be deductibles and copays, right? Because with auto-related accidents, there is no copay for PIP. There is no deductible for PIP. So right off the bat, understand you're going to have deductibles and copays depend on, and those deductibles and copays come into play every year. You don't have that with PIP at all. So that's a major difference. The other piece that comes into play, I would say for most people, Martin, if you look at the difference between Medicare and PIP, it's going to give you a pretty good idea what's different between your health care benefit, other than the deductible and copay that I already talked about. It's going to give you the biggest thing. The biggest issues are going to be the home health care. You know, you don't have nursing home care from medical insurance for the most part. You know, people buy long-term care insurance to pay for that if it's medically driven outside or with automobile insurance, like every other state. That's, I guess, the best I can do to give you some kind of idea. I hope that helps a little bit.
Yeah, thank you. Let me just one clarification though. If you have this qualified personal insurance that is the primary, you're what I'm thinking, I'm hearing, if you have unlimited PIP, if you stay with that, you don't have to cover your deductibles and the out-of-pocket maximum. That's covered through auto insurance.
Yeah, there's a big difference there, Martin, you know. So remember, in PIP, you can coordinate your benefits from your healthcare provider. I didn't get into all that, but you can coordinate your benefit. And in that scenario, if you coordinate, then your healthcare becomes primary, pays first. And in that case, if you are coordinating and getting a discount for PIP because you have health insurance, you could have to pay your healthcare deductible and copay if you're coordinating your benefit. But there aren't a lot of plans that coordinate anymore. So, but it used to be pretty common, but we don't see it as much anymore.
Okay, thank you.
If your bills are over 5, does Medicare pick up the remainder? Again, I gave you the comparison of Medicare, so you'll have that to be able to do that. I don't mind. This has been recorded from Mary Ann. She's going to have this available, I think, on the website. We are also going to have it available on our website. So if you want that stay tuned. We'll have it there. And you can just dial into our website and or OPC's, and you'll be able to see the presentation. Let's see. Anything else? I think we've answered most
Yeah,
of
I
these
think
questions.
most of those are answered. If anybody has additional questions, I'll give you Tim's direct contact. So I
One
just want to
question
say,
I see, Marianne,
okay.
that's not answered. You cannot coordinate your Medicare with PIP. PIP does not give you, you cannot coordinate in that scenario. I don't know why Medicare does that, but they just don't allow you to do that.
Can Medicare be our primary? Is it our
Yes.
primary?
Yes.
Okay, so whatever isn't covered by primary, that's when PIP would take over. or
That's true.
Fill in.
Yep,
Okay,
that's true.
That's the big thing I wanted to understand.
Yep, good
Thank you.
question. Yep, great question. Thank you. Has it been helpful?
Yes.
Absolutely.
Call us if you have any questions. We're glad to help out with OPC. Again, I think we're blessed beyond belief of what we get with OPC. My wife volunteers there as well, but what a great opportunity for us that are, Rewired, not retired, to be able to use OPC. So Marianne, thank you again. I appreciate you putting together and taking the time to do so. If there's any other questions, just give us a call.
Okay,
Hope
we sure
everybody has-
will. Thank you so much for this great presentation, Tim, and thank you everyone for being here today. We'll see you again real soon.
Okay, everybody have a safe day. Be safe out there. Be blessed.
Okay, you too.
Thank you. Same here.
All
Bye
right.
now.
Bye-bye.
Bye-bye.